Hello everyone. Okay, so welcome to another live stream session. Okay, so let's see if everything is in setup. Okay, so guys, I'm double checking the volume, the voice, everything. Okay, so let's check it. Right, the charts are up. So it was all set up, yep. And so what I have open is the Euro FX futures chart. Okay, so let's check it again. I'm checking. Yep, yeah, I was just checking, the volume and everything. So everything is okay. So right, so as I said, what I have here open is the Euro FX futures chart. So before the live stream, we took a couple of trades as well, which I will give you a brief breakdown on those trades as well. Right, so we were looking for bullish setups. The reason is, if you look over here, so you can see over here, if I just move to the dates, so you can see on Friday there was a price push up due to Fed news, strong push up to upwards. And in this price push up, we can see volume was accumulated before the push up over here. So this is basically our volume profile based volume accumulation setup. So you can see the volume got accumulated, and then the price pushed down and immediately pushed up after that with this huge push up. So because of this, so we can see a high volume cluster, a high volume node has been formed over here. So because of that reason, we were looking for a price retracement into this high volume cluster over here. So the price actually all the way yesterday excuse me guys, yesterday the price came all the way down here, you can see, and we had a buy limit order placed over here. Let me just check a couple of things, guys. Hold on. Okay, so we had a buy limit order in place for that. Which was over here. Okay, so let me again check the sound and the video. Give me a second, please, everyone. Yep, all good, guys. So what I was telling earlier was, so because of that we had a buy limit order place, because it's overnight, almost the price was in the overnight session, so we were not monitoring this area live. So because of that, we place a buy limit order. So when we place a buy limit order, basically what we did was we placed the entry at the beginning of this high volume cluster over here. You can see basically we draw this using the fixed range volume profile tool. So basically you can use these tools, volume analysis, and then you can use the market profile TPO. This is a fixed range one. You can use the first one, and basically, so once you draw it over here, let me show it to you guys. So if I just delete it and if I just show it to you again, volume analysis, market profile. So I just click on this one as well. Yeah, so you could see the range build up. So basically what you do is you cover that area and you draw the profile to the price leg, to the price swing over here. So that's where you can see the volume build up. So basically when we place the buy limit order, we place the entry at the beginning of this high volume cluster and then we place the stop loss below this high volume cluster where the volume is low compared to this high volume cluster and volume point of control. You can see the volume is low over here. So we place the stop loss over here. So, and we kept this buy limit order, and overnight session our entry has got tagged, and because we were not monitoring it, we just set up a one-to-one profit, one-to-one risk reward profit. So basically you can see the price, the tagged our entry, price has tagged our entry, and there has been some drawdown but after the drawdown it has gone and hit our first take profit over here. So overnight it was a winning trade which was not monitored. So it was it has been a quick one-to-one risk to reward trade. But then after that, over here, after that first trade, you could see the price. Let me just take this away. So since we discuss about that, let me take out that, right, so that I can explain to you. And then basically for this price push up over here, you can see price small. So once the retracement completes, you can see it reacted to this high volume zone over here, and then the price pushed up, retraced, and then you can see a strong push up. So basically for that strong push up, let me hide this hidden, right, so that I can explain this to you. So for this price push up, when we see a sharp displacement upwards, then basically what we did was we again draw that fixed range volume profile. So basically over into this price swing, so you can see a swing up, retracement, swing up. So we draw it into this area. Then we can see in that price push up, you can see the high volume cluster is over here, volume point of control. So let me delete this and let me re-put that. We go to the object list. Let me put it back again, right? So for this, basically, then into this price swing leg up, we call this as, in this, if you consider this area, we call this as our volume profile base trend setup, because you can see there's a small trend being formed here after the retracement. So in this, basically we were waiting for the price to retrace down into this high volume cluster in this volume point of control area. So you can see we placed another buy limit order over here just above this high volume cluster, the beginning of the high volume cluster over here. So we placed another quick buy limit order over here, and then we basically place the stop loss to be below this swing low over here. So you can see the way I move my mouse, this swing low. So we place safer stop loss below this swing low, and because it's just soon after the retracement of this leg, and then the price started pushing up, so we placed the entry, and once the entry got tagged, once the buy limit order got triggered, we just left it for a 1-to-1 quick trade over here, right? So you can see it was a quick 1-to-1 trade. The reason why we did not left the trade to continue long is, you can see still in this retracement, you can see that retracement has heavily come down with continuous red candles. So even though we were taking buy entries over here, the first one and now the second one, we still have in mind that the retracement is very sharp, continuous red candles. So because of that, there's a chance where the price could have gone, like let's say the price could have hit our entry take, meaning price could have come here, but price could have gone up, but then price could have further come down. There's a possibility because of this strong price movement down. So because of that, basically we did not hold the trade for longer time. So it was another quick 1-to-1 profit grab. Quick 1-to-1 profit grab over here, as you can see, right? So that was the second entry with take profits, which was our volume profile based trend setup. But then let me show you something very interesting after that to you guys. Okay, over here, so let me take off this as well, since we explained that trade to you as well. And then after that, basically what we noticed was, as you can see guys, okay, the price was unable to push all the way up. So this price swing retraced. So we took the second entry, we took a quick 1-to-1 profit grab. But as you can see, the price was unable to go all the way up, because if the price is going to go up, basically the price, once it retraces, it should make a break of structure and move up. Now we are also mindful, because in this price push down, you can see some bearish fair value gaps have been formed. So we are very mindful in taking the bullish entries. Okay. But now once the price was unable to push up here, further up, the price retraced down. Now if you look into this situation from price action concepts, just pure price action, we call this as our set 1, set 2 theory. What that means is, if you look over here, the price pushed up, then you can see it retraced, and then as I said, it was unable to go up, right? So it was unable to push up. So when it's unable to push up, we consider this as our set 1. So that the set 1 meaning try 1. So the set 1, or we call it as try 1, try 2 setup. So the set 1 was unable to push up. In that case, in pure price action, then there's a chance where it will make a set 2, meaning it will try to retrace further down and grab further liquidity, and then there's a chance where the price will move up, which is the set 2. So set 1, set, then set 2, like 2 V's, like V, first V, second V, or U, can V or U, it's like a shape of a character. So set 1, then when it makes a set 2, what it basically does is it grabs liquidity So we noticed that wicks were formed in the set 2 area, and what we did was we wanted to see what the price is doing. So we waited till set 2 get formed, and then we noticed the wicks over here. And then what we did at that time was, when this red candle formed with a wick, then basically at that time we went into the footprint chart. So if I zoom the candles, then now this is a footprint chart. So at that time, basically this is that candle over here. If I just go down again, you will see, right? So this candle, I'm talking about this one with this long wick. Now I'm again zooming that. So you can see this is that footprint, the footprint of that candle. So you can see, but basically in that area where it made a wick, we noticed the negative delta over here. So basically, if it's positive delta, it will be blue color. If it's negative delta, it will be red color. So basically positive delta means buyers are in control. Basically aggressive buyers has emerged. If it's negative delta, that means aggressive sellers. So you can see in this area it's red color, which means it's negative delta. So when you see negative delta, basically that is aggressive sellers has been in action. Now when aggressive sellers are in action, the price should go down. Now you can see in this area the aggressive sellers push the price down. That's why it's red color, negative delta. However, you can see the price did not go down. Instead of that, price went down and came up again and formed a wick. When we see this, we call this situation as absorption. So basically what has happened is the aggressive sellers who try to push the price down, the aggressive sellers tried to push the price down. However, there has been a wall of passive buyers sitting here. Now why that happens is, if I zoom down again, you can see, look at this high volume cluster over here. So this is where smart money, big banks and large institutes have basically built up their positions. So there's a full of buyers, smart money and large banks, big institutes over here. So basically they will defend their buy entry. So when the price retraced down, there's a chance where this volume point of control and this high volume cluster acting as support, and then the price pushing up. So because of that, in this area there is a chance of passive buyers sitting as a resistance level, as a wall of resistance. Now that is why you can see over here even the price pushed up strongly with displacement, right? Now then over here again, if I expand this candle over here, so even though aggressive sellers try to push the price down, because of that reason what I explained, the large wall of passive buyers sitting here, meaning buy limit orders. So when I say passive buyers, it's buy limit orders of large smart money and big banks, large organizations has been sitting here and absorbing these aggressive sellers. So basically what's happening here is, even though the aggressive sellers try to push the price down, that large wall of passive buyers, that means buy limit orders, right? That is the beauty of using footprint charts and volume profile analysis, because if you don't use footprint charts and volume profile analysis, if you just look at basic candles, you can't see this story happening, what I'm explaining here. So as smart money traders, what we do is we look into volume profile and footprint, and we try to understand what the big banks and institutes are doing. So that is what I'm explaining you in this live stream over here, so that you can understand the story behind this trade basically. So again, if I expand, so then that large so then that aggressive sellers has been absorbed by passive buyers by limit orders. So, and that is why the wick was formed into this candle over here. So once we see that, what we did after that was we waited to see what the next candle would do. So this is the 30-minute chart of Euro FX futures. So basically what we waited was, we waited till the next candle completes, the one after that. Once that candle completes, and while that candle being completed, what we did was we looked into the footprint of that candle, which is over here. Then we can see positive delta values, that means the blue color values being formed, and a green color candle. So what that means is excuse me guys, what that means is, now we can see it confirms that buyers are in control, because the negative delta now has changed into positive delta and a green candle. Then soon after the green candle was printed, after that 30-minute candle was printed, that is where we entered our third entry. So basically what we did was we placed a buy limit order slightly above that candle over here, because once this 30-minute candle was printed, basically what happened was it started here, it went all the way up, and it came down here, right? Soon after we noticed that, we place a buy limit order just above that candle. So this is the volume profile based footprint analysis. So we call this analysis as order flow analysis. So this is what we call as order flow analysis. So once we complete this order flow analysis, we place the third entry, a buy limit order over here, and we kept our stop loss below this red candle over here, below this, basically when I say red candle, it basically below the swing low of this point. So because once this green candle was printed, this is a swing low. Now if we are taking a buy entry, we are looking for a swing low to place our stop loss. So below this swing low is where we place the stop loss over here. And then you can see the price immediately tagged our entry, because it should tag the entry, because we placed the buy limit order just above the candle. Basically we placed a buy stop order because we place it above the price, so it's a buy stop order. So the buy stop order got triggered, and then you can see we were targeting this swing high, because if this is a price swing up, then if this is the retracement, so set 1, set 2, the retracement, and then we can see we saw aggressive sellers absorbed by passive buyers, and then we can see negative delta change into positive delta and a green candle printed. So with all that confirmation and confluences from volume profile analysis and order flow analysis, we place the buy limit, buy stop order and stop loss below this, and as I said, take profit to be in this area of this swing high. So in that trade, basically we banked around 1 to 6 risk to reward trade profit. Now why are we not holding these trades long? Because of this, in this retracement, as I said earlier, this bearish fair value gaps excuse me guys, this bearish fair value gaps and this red candle, so we are very careful in taking these buy entries, but we are taking it with solid volume profile and order flow backup analysis, right? So that is where we banked 3 profitable trades over here, right? So that's a live analysis of the market and the trades we have taken. So this is the Euro FX futures chart. So if you then, by the time we had a look at the GBP FX futures chart as well, but we chose, excuse me guys, we chose the Euro FX futures because that price action was, the price was reaching this high volume profile over here. Whereas if you look at the GBP FX futures, you can see that high volume over here, but the price came towards that, but it didn't touch, you know, this high volume cluster, high volume node formed over here. So that is, the price came here. So that is why we choose the Euro FX futures to take the trade. Okay, so yeah, and then let me also look into the other charts, but let me just double check the live stream. Yep, everything good. Yep, okay. So then when we look at MNQ 30-minute chart and MES 30-minute chart, so if you look at MNQ, micro E-mini Nasdaq index futures, we saw that similar price action. This is the Friday move push up, high volume cluster. You can see a bullish fair value gap as well. However, you can see we are waiting for the price to retrace into this high volume cluster. Now, if I again go back to the Euro FX futures chart, see this price push up, the retracement came to this high volume cluster, as you can see over here, this point, right? The price retraced all the way to the high volume cluster. But if you look at micro E-mini Nasdaq index futures, see the price still did not reach this high volume cluster area, see? So that is why there was no trade for us for the MNQ, micro E-mini Nasdaq index futures. So basically we are waiting for the price to retrace over here, and if the price retraces over here, then we will look into a possible buy entry placed over here with initial take profit 1-to-1, but then after that we will move partial take profits all the way up depending on the price action at that moment, right? So we bank 1-to-1 and then we keep the trade running. So then if you look at MES 30-minute chart, micro E-mini S&P 500, again similar price action, price pushed up on Friday making high volume cluster. So again you can see we are waiting for the price to retrace to this high volume cluster. You can see there's a fair value, bullish fair value gap as well, which is a smart money concept. So we are waiting for the price to reach all the way down here, and then we will analyze the situation and take a potential buy entry. And the stop loss will be below this high volume cluster over here, right? And then the first take profit will be a 1-to-1, and then we will move it all the way up, targeting maximum 1-to-6 over here. So that those are price levels, weekly trade levels we are looking at. So if you ask what are the weekly trade levels, one is this in the MNQ 23,253.50 over here, and then MES 63.98 price point, right? Those are the weekly trade levels, so you can those are the weekly trade ideas for you guys, right? And then what I analyzed was the Euro FX futures, which we already took 3 trades and bank profit, as I said. Okay, so then the current price action you can see is it has made a price push up and made a bullish fair value gap over here. Now, are we taking a trade here? Well, you could take a trade here when the price retraced into this bullish fair value gap. However, now you can see the price has already, basically now we already took 3 trades. So we will not take another trade because since we took 3 trades, and also the first 3 trades we took are more reliable than the current trade. The reason is, when I say more reliable, what I mean is the first trade we took was based on the high volume cluster, a quick reaction. We expect that quick reaction, so we took it. Then second trade you can see we took was due to this displacement, our volume profile based trend setup. So that also we took a quick trade. And the third trade we took was based on our set 1, set 2 theory over here, and then footprint analysis. Aggressive sellers being absorbed by passive buyers and negative delta change into positive delta. Footprint analysis. Based on that, we took our third trade because set 1, set 2 and wicks. So then there's a high chance where the price, after making these wicks and the green candle, there's a chance where the price could go and hit this swing high over here. So those 3 are more confident trades compared to this one. Why I say more confident is because this price push up over here, this price push up did not make a significant breakout, meaning break of structure, right? So it did not make a significant break of structure up. It pushed and this act as resistance. Now, if when the price pushed up, if it made a significant break of structure, if it made a significant break of structure up here, then with this bullish fair value gap, if the price retraced to the bullish fair value gap, then there's a high, then there's more probability of this setup, right, for a winning trade. But at the moment, because the price did not make a break of structure, price came and this act as a ceiling over here, like resistance, and now the price is coming down. And since we have already taken 3 trades, we will not take this trade. However, if any one of you have not taken these 3 trades, what we said, if you want, you better take a conservative trade entry here, right? If you are taking that trade, what you have to do is, we'll show you. So make sure to place the trade at the bottom end of this bullish fair value gap for your safe side, right? And then look into placing the stop loss below this swing low. But for extra safety, you can either this swing low, or if not, for extra safety, you can place it over here, right, below this swing low. And you could, what you have to do is take first 1-to-1. If the price, if you enter the trade, first take profit at 1-to-1 over here, right? And then bring, after you take the first take profit into 1-to-1, bring the stop loss into break even, right? And then after that, grab the second take profit somewhere here for a 1-to-7, right? So that is another trade idea, but be very conservative when you are taking that trade, right? But we will not take that trade because we have already taken these 3 trades. Yep. So that's a trade idea for you guys to look into. Yep, guys. So that's mainly the live trade session for today, because we gave you the idea. So now wait for a potential entry over here. With that, we are going to wrap up this live stream, right? Because we just need to now wait to see what the price is doing. You got a couple of trade ideas here. First one is over here, second one in S&P 500 over here, then third one Euro FX futures over here, conservative entry likewise. Okay guys, so with that, let's wind up this session, and happy trading, and hope you guys got some insightful information from this live session. All the best for you guys. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional.